Facebook stock just broke down under key support. I need to show you what I'm talking about here because it could mean big things for the stock going forward. Let's jump in. Okay, so I've got Facebook pulled up in TradingView. I'm going to show you guys what I'm talking about here, but real quick, if you're not a subscriber yet and you like technical analysis, stock chart pattern analysis, hit that subscribe button because I do a lot of these videos. I try to get at least one out a day, okay? So let me show you guys what I'm talking about. Let's zoom in a little bit more. Because we have this kind of consolidation period going on this chart, right? And you can see we've got some pretty big waves, lots of touchdowns on the support and resistance, so pretty legit consolidation phase going on here. And you can see over the last couple of, well, not couple actually, we're talking about like 1, 2, 3, 4, 5, 6, 7, 8 candlesticks under support there. That is not good for this stock going forward. We need to get back above that support line or this is going to be bad news for Facebook. So this is a consolidation phase coming off of a bull run, so typically we like to project to the upside on these. But if it breaks down under support, you can project to the downside on these as well. So you really hate to see it when you break down under support on these because we typically do see these as projections to the upside, right? We're continuing a bull trend, or we're at least consolidating from a bull trend. The stock is kind of taking a breather. It had this huge run up since March. You know, this stock was all the way down in the 130, 140 range back in March, and it got all the way up to a high in the 300s. Right now it's trading at 273, so it's been chopping around, it's been consolidating. It needed that breather from that huge run up in 2020. And typically after you get that breather, you continue whatever trend you had before your consolidation period. So this should have continued to the upside. Well, we're breaking down under support right now. That is not good. You know, if we keep chopping sideways for a little while longer, then we can just redraw these lines and maybe we have a new kind of consolidation period. But if we start to drop from here, then I would expect it to continue to drop. Actually, we can project how far it's going to drop, just like we can project how far it's going to run up after this consolidation phase. That's actually kind of easy. You just take the width of the channel from the first touchdown, right? I'm not going to include this first touchdown down here. I actually just pulled this line out just to see if it would touch that, and it just happened to work out. I'm not going to include that because this channel didn't start until we got this first touch on support up here, right? So we're going to start our ruler conservatively. I mean, we could start it down here and go to this, but that's a little too aggressive for me. I prefer to be conservative, right? So I'm going to take this touchdown and measure it to the top of the channel, and we get about $57.50. So you can take that $57.50, and if we were to break out to the upside above this consolidation phase, as we should have, because we were continuing a bull trend, we would have just put our $57.50 wherever we thought we were going to break out. So if we thought we were going to break out right around the end of the pattern, then we would have added it right here. We get our $57.50. Man, I cannot get it to stick, but it would have been in the $343 range, right? It doesn't look like that's going to happen. I mean, it might still happen, but it's not looking good. We may need to retrace these support lines here shortly because we have been chopping sideways a little bit. So that is actually a good thing for Facebook. You know, it's not dropping like a rock after dropping below that support. So that's a good thing. So we need to see if it's going to keep chopping sideways or if it's going to start dropping. If it does start dropping, then we take that $57.50 and you trace it from right where you broke under support. So that downside target could be as low as $213.63. That would be the target to the downside if we started to drop from here. So it doesn't look like, you know, over the last whatever it was 8 trading days, we haven't really dropped too hard. So that's a good sign. We have been chopping sideways, but the longer we chop sideways, the further we get away from entering back into that wedge, right? So we really need to get back above that support line. And if it doesn't happen, then we'll just retrace the lines. If we keep chopping sideways, if we start to drop from here, then our downside target is $213. Okay, so So that's what I got for Facebook. I hope you guys enjoyed it. Basically, long story short, watch for that support line right there. See what the price action does around that support line. If we start to drop from here, then I think we're going to go down to 213. If we continue chopping sideways, then we'll just retrace these. We'll retrace that support line, and maybe that'll give us a new kind of consolidation phase, and we'll keep watching from there. Okay, I hope you guys enjoyed that. If you did, hit that like button, subscribe, leave a comment down below, and I will see you guys there and in the next video. Thanks.